next to nobody owes you anything. So the alternative for economies seeking to do business with each other outside the SWIFT banking system, outside the US dollar, really comes down to gold, 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 or gold. In my experience, Patrick, a precious metals bull market, the precious metals narrative is always led by gold. The two primary investing emotions are, of course, greed and fear. And in my 50 years of investing, the precious metals narrative is always led by fear.
Silver outlook. Will silver eclipse gold amid rising inflation? Silver defies norms, climbing 3.60% despite strong dollar and treasury yields. Fed's upcoming policy decisions critical amidst persistent inflation indicators. Silver ended last week on a high note, closing at $25.19, marking an increase of 0.87 or 3.60%. This upward movement significantly contrasted with gold's modest decline. The trend propels silver towards testing recent highs of $25.91 and $26.14. Differing from usual market patterns, the U.S. Producer Price Index reported a 1.6% year-over-year rise, primarily driven by escalating energy costs. These figures indicate persistent inflation, suggesting the Federal Reserve may extend its tighter monetary policy. The upcoming Federal Reserve meeting is highly anticipated. A hawkish stance from the Fed, suggesting higher interest rates, usually signals a decrease in silver prices. In contrast, a dovish Fed could increase silver's attractiveness by lowering its global cost. Now, we'll show you more clips, but first, subscribe, enjoy the video.
As a commodity right now, because I have enough. In my experience, Patrick, a precious metals bull market, the precious metals narrative is always led by gold. The two primary investing emotions are, of course, greed and fear. And in my 50 years of investing, the precious metals narrative is always led by fear. There isn't sufficient fear in the world, except among non-U.S. central banks, to drive the gold price. But I believe that fear is coming. I don't own gold, and I'll get to silver in a second. I don't own gold because I think it's going to move from $2,000 to $2,250. I own gold because I'm afraid of the possibility of a real rout in the U.S. dollar. The type of rout that we saw in the decade of the 1970s. If that happens, I'm not saying it's going to, but if it happens, you won't see $2,500 gold. You'll see $5,000 gold or $6,000 gold or $8,000 gold. You'll see a truly stupid number. There's lots and lots and lots of corroboration of this in history. You don't need to look just at the 1970s when the gold price went from $35 to $800. You can look at the decade 2000 to 2010 where the gold price went from $250 to $1,900. If we experience a gold bull market, which I think is a probability rather than a certainty, in my experience, silver lags. The first part of the bull market is led by gold. But when the narrative gets to the generalist investor and they move down into the silver space, silver moves much further and much faster. And silver, as a speculation, is a coiled spring. While gold in nominal, not real terms, but nominal terms, has broken out into all-time highs in every currency on the globe, silver is still selling at half of its nominal all-time highs. From a speculator's point of view, for those people who have the psychological and the financial wherewithal to stomach volatility and to have a couple of years psychological patience, the hate that you talk about, the fact that people really hate the silver market, just like they hated the uranium market in 2022, is extremely attractive. It is buying into hate where the easy money is made. And
Gold has garnered a lot of attention in the last few weeks with its record-setting run. Since the end of February, gold is up nearly 7% and set an all-time record of $2,195 an ounce along the way. I've been arguing that silver is drastically underpriced given the supply and demand dynamics for quite a while. With gold setting up for an extended rally, silver could be poised for a record-setting launch of its own, and it just might steal gold's spotlight. Anticipation of Federal Reserve rate cuts and worries about de-dollarization sparked the gold's recent bull rally. I've argued that this is just the opening act. The U.S. government isn't going to suddenly become fiscally responsible or more reserved in using the power of the dollar as a foreign policy tool, so de-dollarization will likely continue and accelerate. When the economy cracks, we all know what the Fed will do. It will run to the rescue. It will slash rates to zero. It will relaunch quantitative easing. It will unleash another tsunami of easy money. What is gold going to do then? If this recent rally based on the hope of rate cuts was this big, the rally we'll see when the Fed actually delivers rate cuts far beyond what anybody today expects will likely send the price into orbit. Now we'll show you more clips, but first like and subscribe to the channel. Enjoy the video.
it isn't private buying in the United States, Canada, or Western Europe. It's right now, statistically, central bank buying. I think it's a direct reflection of the weaponization of the US dollar. I think many central banks and political establishments in many countries are tired of the extraterritoriality of American imperial policy. I think that they understand that the United States is debasing its own currency, and the United States is making investments in U.S. Treasury securities much less attractive. And they're acting in self-defense. I think, too, contrary to popular opinion, that part of the central bank purchases of gold have to do with the fact that while they don't trust the U.S., they trust us more than they trust each other. And they know, as an example, if you're China, that you don't want to build up too many rubles in your export account for fear that the Russians won't let you buy anything with them. They would much rather transact in gold than they would in their own domestic currencies, which, as bad as the U.S. dollar is, are even worse than the U.S. dollar. Doug Casey famously said the U.S. dollar is an IOU nothing. The euro, backed by what, 16 countries, is a who owes you nothing. And the BRICS currency, the proposed BRICS currency, is in that context a nobody owes you anything. So the alternative for economies seeking to do business with each other outside the SWIFT banking system, outside the US dollar, really comes down to gold, 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 or gold. If you see a circumstance where the retail investor, particularly in the United States and in Western Europe, comes to be concerned, as they came to be concerned in the early part of the decade of the 70s, about the deterioration of the purchasing power of their savings in euros or in US dollars, then you will see follow-through buying of gold from individuals. When that happens, as happened in 1972 and then again in 1976, I think the top is off. Whether that happens in 2024, frankly, Patrick, your guess is as good as mine. People's expectation of the future is set by their experience in the immediate past. And for Americans, their experience in the immediate past is pretty good. Equity markets are in really good shape. The bond markets, against all odds, are holding their own. The banking system, despite the strains with regards to commercial real estate and duration risk, are in pretty good shape. Americans are not afraid right now, at least Americans with money. And the consequence of that is that retail demand for bullion in the United States, in Canada, and in Western Europe is not strong. Retail demand for gold, at least among the people, the 80,000 people worldwide who are subscribers to my services, in emerging and frontier markets, particularly in cultures with a long-standing affinity for gold, which is to say Chinese people, Japanese people, Korean people, Indian people, Pakistani people. That interest is very strong. Very, very, very strong. When I answer questions from my own database, if I'm answering questions that have specifically to do with bullion, how to get bullion, where to get bullion, the overwhelming proportion of those questions come from people who are domiciled in frontier and emerging markets countries or recent immigrants to the United States and Canada from those countries.
What do you think of Rick Rule's take? Will silver rally continue, and will we make new all-time highs in 2024? Post it in the comments section down below your price prediction for gold and silver. Subscribe if you have not yet done so, and watch this video right here because you'll love it. I see you on the other side.